So here's the big question everyone is asking. Is all this excitement around AI the start of a real technology revolution, or are we just living through the next giant dot-com bubble, waiting for the pop? Today, we're going to dive into both sides of that argument to figure out what's really going on. Let's just start with a number, a huge number, $5 trillion. As of late 2025, that's the value of a single company, NVIDIA. I mean, think about that for a second. One company worth more than the entire economy of most countries on Earth, and it's all built on the promise of AI. That's the scale of the financial bet being placed right now. So, here's how we're going to break this down. First, we'll look at the story that this is all just a financial bubble. Then, we'll explore the flip side, the technology revolution story. After that, we'll try to bring those two ideas together and figure out what might actually happen next. All right, first things first. Before we can say if AI is in a bubble, we have to agree on what a bubble actually is. So, what is a market bubble? Well, basically, it's when the price of something, stocks, houses, you name it, gets driven way, way up. Not because it's actually worth that much, but because of pure excitement and speculation. Everyone's buying because they're afraid of missing out. But that excitement doesn't last forever, and the story almost always ends with a sudden and painful crash back down to reality. Now, you've probably heard the dot-com comparison 1,000 times, right? And yeah, the hype feels similar. But there are some really, really big differences. Back in the 90s, you had companies with zero profit being valued at billions just because they had website visitors. Today, the leaders of the AI boom, your NVIDIAs and Microsofts, are making staggering amounts of actual money. And big businesses are already using this tech in a way they just weren't with the early internet. Okay, so let's put on our financial analyst hat and dig into story number one, the case that AI is, without a doubt, a classic financial bubble. And the evidence starts with the money. I mean, look at this. In the entire year of 2024, about $95 billion was invested into AI. In just one quarter of 2025, that number jumped to over $192 billion. That's more than double the money in a third of the time. This isn't just growth, it's a gold rush. It's the kind of frantic pouring of capital that screams market fever. So why is that happening? Well, it's all about how these companies are valued. A normal, successful software company might be valued at, say, 20 times what it makes in a year. But AI startups, we're seeing valuations of 40, 50, even over 100 times their revenue. They're not being priced on what they're doing today. They're being priced on the hope that they'll dominate the future. It's pure speculative potential. And hey, don't just take my word for it. This quote is from Sam Altman, the CEO of OpenAI. He's literally at the epicenter of this whole thing. And even he is looking at the market and saying the valuations are insane. When the people inside the machine are telling you it's overheating, you should probably listen. And it's not just the crazy price tags. Analysts are pointing to a bunch of other red flags. You've got weird stuff like circular financing, where a big company invests in a startup, and that startup immediately uses the money to buy the big company's products. It creates this illusion of demand. Then there are the costs. We need a projected $1.5 trillion just for data centers to run this stuff. And on top of it all, some big customers are starting to hit pause, asking, hey, what's the actual return on investment here? And then there's the concentration risk. One company, NVIDIA, makes up something like 8% of the entire S&P 500. If they trip, the whole market could fall. Okay, so that's a pretty convincing case for a bubble, right? But what if stock prices and investment numbers are just the wrong things to be looking at? Let's flip the coin and explore story number two, the technology revolution. This really gets to the heart of it. The financial side looks pretty wild, yeah? But is there something real? Something truly transformative happening underneath all that hype that might actually justify it in the long run? Check this out. This chart measures what AI can actually do on its own, not just what investors think it's worth. Back in 2020, an AI could maybe handle writing an email, a simple 15-second task. By 2025, it can code an entire app, a job that would take a human hours. And look at the projections. By 2026, it could handle a full day's work. By 2028, a week-long project. This is a measure of real economic power, and it is exploding. To really put this in perspective, let's compare it to the most legendary trend in tech history, Moore's Law. For decades, the power of computer chips doubled about every 2 years. That's what gave us the entire digital age. Well, according to this data, AI's real-world capability is doubling every 4 to 7 months. That is a pace of progress that makes Moore's Law look like it's standing still. Okay, you might be thinking, but what about all the dumb mistakes AI makes? That's a great question, and it's explained by this idea of the jagged frontier. See, AI progress isn't a nice, smooth curve. It's brilliant at one thing and then shockingly bad at another. It takes these huge, sudden leaps in one area while other areas lag behind. So that weirdness, that inconsistency, isn't a sign that it's failing. It's just what exponential growth actually looks like up close. So, how on earth do we put these two stories together? On one hand, you have a financial market that looks totally overheated. On the other, a technology that is progressing at a historic rate. What gives? Well, when you boil it all down, there are really three ways this could play out. Possibility one, it's a full-on bubble. The tech doesn't matter, the prices are nonsense, and a massive crash is coming for everyone. Two, it's a hype cycle. The technology is absolutely real, but our expectations have just gotten way ahead of reality. A correction is coming, but it will mainly just clear out the weak companies. Or three, this is a genuine structural shift, like the invention of the internet, and the wild valuations are actually the market trying, maybe clumsily, to price in a future that looks totally different from today. And this slide really lays it out. The financial story is watching stock prices and concluding the market is overheated. The technology story is watching real-world benchmarks and concluding progress is accelerating like crazy. And here's the key idea. Both of these things can be true at the exact same time. You can have a market that is irrationally excited about a technology that is, fundamentally, revolutionary. This leads us to what many experts think is the most likely outcome, a significant correction but not a total crash. Think back to the dot-com bust. Was the internet a failed idea? Of course not, but companies like Pets.com were. The market eventually sorted out the real value from the hype. Most analysts expect the same thing here. A huge percentage of today's AI startups will probably disappear, but the ones that survive could become the next Amazon or Google. So, with all that in mind, what can we realistically expect to happen over the next few years as all this drama plays out? The roadmap seems to have two main phases. In the short term, say the next year or two, it's all about practical application. We'll see AI getting baked into the software we already use, and AI agents will start to handle more complex tasks for us. And yeah, the demand for those powerful computer chips isn't going anywhere. But long-term, from 2026 and beyond, that's when we see the massive economic impact. Forecasts suggest AI could add almost $16 trillion to the global economy, creating a world where parts of a business can run themselves. So if you're trying to make sense of this all, the advice from analysts seems to boil down to a few core ideas. Look for fundamentals, companies with actual cash flow, not just a cool story. The picks and shovels companies, the ones building the infrastructure for everyone else, are still a key part of the equation. And maybe most important of all, start watching the adoption data. Move beyond just AI potential and start demanding AI proof. And that really brings us to the final thought. Maybe asking, is this a bubble, is the wrong question. When this much money moves this fast, some kind of correction feels almost inevitable. The real question, the $5 trillion question, is this. When the music stops and the hype finally dies down, who's going to be left standing? Who will have proved that their value was based on truly revolutionary technology all along? The next few years are going to be fascinating.